What's good, YouTube? It's your boy Teddy here. Welcome back. And if you're new to the channel, I'm Teddy Trades. For slight changes, I tweaked my name to Teddy Trades, and I hope it's not a big deal because I feel like it ties to the fact that I'm open to learning about trading different pairs like crypto, futures, indices, so not just forex. So before it was Teddy Forex, and right now I tweaked it to Teddy Trades. So yeah, I just think it opens up my versatility. See me using big words. Mad. So moving on with the video. Today we're going to be learning about liquidity. I know you have heard this a lot, and if you're a new trader and you don't know what liquidity is, I got you. So we're going to learn about liquidity and how important it is in the market. We'll be moving along with my free PDF, link in the bio. First off, what's liquidity? Basically, yeah, liquidity is money in the market. Okay, so whenever you think of liquidity, think about money in the market. So in the financial markets, orders are being filled with orders. So say you place a buy stop, what your broker does is he goes out and looks for an opposing sell stop that could fill up your order. Your orders could be filled, if you get what I'm saying. So you can trade your buy stop. But for big corporations to place orders, what they need is large amounts of money. They move with big money basically. So to be able to fill those orders, they need multiple opposing orders. Say for example, you are a fisherman, and you have a bunch of fishes gathered at a part of the lake. You're going to take your boat over there and say, I'm gonna get a bunch of y'all, and get a bunch of those fishes so you can go home and eat. So that's basically what liquidity is. So this is what we call liquidity. When the market movers, they see a potential place where new traders and newbies are possibly putting their stop losses, they create a fake out, stop out those traders and push price in the opposite direction. Once they stop out those traders, their orders are going to be filled. They take out the trades of the newbie traders and they fulfill their own trades because they have the big money. They have the ability to do that. So that's basically what liquidity is. So when you hear someone say, oh, I was liquidity, it means they've got stopped out and markets either moved in the same direction with higher volume or moved in the opposite direction with higher volume. Now, fortunately, us retail traders, we can use liquidity to our own advantage. Yeah, so we could use it to set either profit targets. So say you place a trade, you could watch price run up to go take out those liquidity that the market movers are seeing, the big corporations in the market are seeing. You could use it as your profit target, or you could use it to find an entry. So liquidity is also important. It has a good side and it has a bad side. So the first goal is to identify where the market is going to draw to. If you can determine where the market is most likely to draw to, that's the largest portion of the battle. So we're going to hop on the chart and I'm going to show you price moving, taking out liquidity, so you can get a basic understanding of how this liquidity is taken out and how price moves with liquidity. So yeah, hopping on the charts, this was a trade I took on my demo account. So it was a 1 2 3. I can place the profits up for you, and you can see price gets us. We eat price a little, nothing too much. Okay, so looking at this example, we're on the Euro USD. You can see here, this was the liquidity sweep here. This was liquidity sweep. So that was the liquidity sweep. Now, we're going to take it back a bit. Now, what do you see here? What can you see here? You can see equal lows and equal highs. Almost equal lows and highs. Now, most people will see this liquidity sweep, but you have to pair it with a break of structure before you actually place a trade. Looking at this, price didn't break structure to the upside, meaning price is not ready to move up yet. So you can see price sweeps those lows again, boom, right here. This is what we call a liquidity sweep. So basically, people could have been expecting the price is already going to go up once it has already started going like this, and they would have placed a buy order here, right here, with their stops on the low of it. So say they place this trade right here, they went in too early, so price could come, stop them out and use their money to push price in the opposite direction. So you can see liquidity sweep, price sweeps this equal lows here. Now what else can you see here? You can also see this equal highs and equal lows here. Now it doesn't need to be an exact line, it just needs to be basically a zone, but I mark mine out with a line just for simplicity. Now this is going to be our profit target. Now when you see price has swept these lows here, you can actually expect price to actually move up. A buy here with your actual stop, and it's with the rest of the market. Remember, our liquidity could be at equal lows and equal highs, or at swing lows or swing highs. What do we see here? We see a high being created. What do we see here? We see a swing high being created. So we could place our profit targets here, going for a 1 to 4. Take profit 1 right here. Now watching price play out. Boom. Take profit 1 hit. We're going to see if price actually goes for the take profits 2. Where else could you see liquidity? Liquidity could be still up here, but you do not want to be too greedy to hold still there. Price could decide to go out and take some liquidity out before it will have the power to push up again. So you can see take profit 1 was hit, and just being patient and waiting for the trade to play out, you see boom boom, trade take profits 2 was hit again. So that's liquidity sweeps.
Asapu, it's okay. One more.
So looking at in another example, we're going to look for a sell liquidity sweep right now. Okay, pushing back a little, we can see this equal highs and equal lows here. Just this basically. You can see this was already swept here. You could basically place your entry from here and watch price. This was swept. This old high was swept and broke structure to the downside. But these equal highs are being kept right now. And let's watch price sweep these equal highs. Boom. So you can see this price sweeps them, creates this fair value gap. Now you can go for a sell. Place your sell stop here. But to be safer, you can place it up here because chances of price coming this high again are pretty slim. Now again, what are you looking for when you're looking for a liquidity sweep? Old highs and old lows. So looking at this low here, looking at this low here, boom, you could place your profits targets here for a 1 to 4. Now let's watch price play out. Boom boom, that was pretty quick. So take profit 1 hit, take profits 2 hit. So that's basically it. So thanks for watching the video. Hit that subscribe button. I'm Teddy Trades, and let me know any new type of video that you want me to create. And yeah, that's it. See you all later. Peace. Oh, Jesus loves you. Peace.